Hello, it's Cameron here. Apologies if my voice is a bit croaky. I've been quite ill the last couple of days, but I thought I'd quite like to make a video, sort of talk about a few things. And also, I'm going to Croatia for the next week, so I won't be producing any videos, and I'd quite like to get one out there before then. Anyway, but let's get into it. So, I wanted to start off talking about this article, which is a bit older. It's actually from May, and it's middle of June at the moment. It was basically talking about how Goldman Sachs changed its prediction for the end of the year. So they started off with 4,700, and now they've sort of lowered that down to 4,300. And if we actually look at the S&P 500 at the moment, it's at 3674. So they're looking at just under a 20% gain by the end of the year. Um, I don't know if I think it will go that high, if I'm being honest. I've seen so many predictions from everything. I don't think. Yeah, I mean, obviously, nobody really knows what's going on. I mean, in my opinion, it's timing the market beats timing the market. I think. But I mean, I've been going broke dollar cost averaging for a good couple of months now. But anyway, if we look at the other side of the coin, this article is actually came out the other day, and it's talking about or looks more historically at how long bull markets last, no, how long bear markets last, and how long bull markets last, and how far they go up. So Bank of America was basically said here that bear markets average decline is 37.3% over 289 days. And if we have a look year to date so far, it's gone down 23.39%. And I think the Nasdaq is at 30%, negative 30%, if I'm not wrong. Yeah, just over 31%. And basically that if we look at that data and apply it, basically the bottom should be on 19th of October, which anniversary of Black Monday, which is pretty cool as well. But yeah, I'm just going to carry on dollar cost averaging until then. I'm not really sure when the bottom will be. I've seen so many predictions. I don't know. But yeah, something else I wanted to look at was this, which is actually made by CNN. So usually, I've mentioned it quite a few times before how I look at fear, and because obviously I dollar cost average normally, but I have like cash reserves for like big purchases for when I believe the market's sort of really fearful and you can get stuff cheaper. And usually the way that I determine that is through the VIX index, which I sort of view as a proxy for like fear in the market. And I've just sort of found this over the last couple of days, which is CNN's Fear and Greed Index. I need to have a look more about how they actually measure the fear. Obviously, you can see everyone's quite scared at the moment as well. But yeah, so it's got a few metrics, which is market momentum, stock price strength, put and call options, that sort of thing. And each of them sort of contribute. I'm not 100% sure how it does it, but I thought it was an interesting metric other than using the traditional sort of VIX. But yeah, yeah, I also wanted to take a look at arguably my favourite stock at the moment, which is actually NEO. So they've actually done quite well over the last month. I think I bought more around 14, 15 dollars, so that's pretty good. It's one of my big winners. But I also believe that it's going to do really really well this year. I think by the end of this year it will probably hit like $30, and that's not just and that's in like the current like market speculation as well, where everyone thinks there'll be a recession by the end of 2023. But there's a few reasons for that, and that's like the discounts that China's getting on Russian oil. I think it's 30%. I'm not sure which other countries are getting it. And then it's also Chinese is doing loads of quantitative easing as well. And this is like NEO's basically their biggest EV or biggest candidate for being an EV producer. So I'm very, very happy to be in NEO. I think it's going to do really, really well, at least by probably the end of 2025, with NEO Park being developed and all that. Yeah, quick few other little points that I just wanted to make. Yes, yeah, I can't remember the specific article I was reading because it's been over the last couple of days since the Fed announcement, but I do see another 75 basis points rise coming next month, and that's mainly just because the language and the sort of wording that the Fed has been using over the last couple of days has been much more right, cutting this off, no more in regards to inflation. So I think it's been a lot harsher. So I definitely see a 75 basis points rise coming. Yeah, and from that, I do expect financials to have a run up, and particularly, I think I mentioned it last video. Firms like Citi and Goldman Sachs, I think, will do really, really well coming up as interest rates continue to rise. And then also, I've I've been a bit hesitant about this. So like, I'm invested in Cenabus quite a lot, which I think I mentioned last video. But in regards to how well I think it will do is if the US hits a recession, obviously recessions lead to like obviously less production, which means less oil. So if the US does enter a recession, I do believe that energy stocks will also suffer. I'm not sure to the extent of which, and I'm not sure how much it will sort of undo the damage that obviously the Ukraine-Russia war has done to energy, or that's boosted energy. I don't know how much a recession would sort of drag prices back down. But yeah, I don't know. I'm still very much on the fence about this. I mean, I'm still very Cenabus is my biggest winner at the moment. I think over the last 6 months. Yeah, so I don't know. I'm a bit hesitant about that one. But anyway, that's just a quick video. Talking about some of the things for this week. I'll be back next week making another video. But yeah, apologies for my voice, and thanks for watching.